as a homeowner, people think the mortgage is like a byproduct of home ownership, and on some space and element it is. But I think what happens is people forget, because life gets really busy, about the fact that this is an asset. You own an asset that, for the most part, over time appreciates, which means that your wealth is growing. And with wealth growing on that asset, that equity can be leveraged to do different things that come along in life. And I think just because, again, people get so busy, I get busy, you get busy, and people don't always think about their homes that way. So whether it's building wealth and just showing your bottom line net worth, there's something there, and it's happening automatically, which is the beautiful thing about owning residential real estate or real estate in general. But my encouragement is to do an annual review. Understand what the market value is, realize that's going to go up or down, understand your equity position, review your mortgage, review your homeowner's insurance. Can you eliminate mortgage insurance now because now you have more equity in the property? These are really important conversations to have. And they don't take long, and it doesn't have to be a lot of effort. It can be a 15-minute chat, just a check-in. Because this is the biggest asset that most of us will ever own in our lives. And when I say leveraging your home equity, here's a great example. We had a recent past client of ours that called about a debt consolidation loan that they were looking at, not through a mortgage-related debt consolidation loan, but just one of those services that are out there. They're debt consolidation services that allow you to kind of consolidate your debt. Well, a lot of those, how those programs work is that you have to go late on the debt before they start to negotiate the reduced payment. Not all of them, but the one that they were looking at in particular, we had seen experience with, and it was going to require that they went late, which is going to destroy their credit. So the fact that they were able to reach out and they had a ton of equity, they were able to accomplish the same goal with regard to debt consolidation and do this in a way that could protect their credit. And I can't tell you just how important that credit is in so many things that we do, whether that's getting a new job, especially financial services. Guess what? They're pulling your credit. Whether that is applying for homeowner's insurance, guess what? They're pulling credit. Certainly going through the home loan process, pulling credit. And so in this client's case, I'm so excited that they reached out before they went and did that, because had they not, it's 6 months downstream, when they started to see that credit and their credit score plummeting, had they called then, we wouldn't have been able to help them. But the fact that they called early on before making that decision, we were able to give them another option to consider. And that's again what I'm talking about here. It's so much about strategy based on what the goals are. And let's face it, the internet is a beautiful thing. It's also not always accurate. So, sometimes people are relying on what we're reading, on the internet. It's easy to do, but it doesn't always fit the scenario, doesn't always fit what the goal is, and it isn't always going to tell you the complete story. So best to have a quick conversation with an expert in the space that can give you some strategic guidance with regard to what you're trying to accomplish. In this client's case, one of the reasons why they were going to this debt consolidation outside vendor, not a mortgage, was they have an incredibly low interest rate on their mortgage now. And they didn't realize that they could accomplish this debt consolidation with a second lien. It's a second mortgage. And those interest rates are higher than first mortgage liens because they're in second lien position on your house. But they're still extraordinarily lower than what credit card interest rates are. So again, I think it's one of these just interest rate, or the internet doesn't always get it right. There's a lot of confusion about what home equity lines of credit are, what home equity loans are, how they work, what are the terms of them. This is where just better understanding how they can be helpful to you could be the answer, and maybe it's not the answer, but you won't know until you really dive into the conversation. We had another client reach out recently who wants to buy a second home, and they're about 5 years out. They just purchased their first home, so excited for them. But now they've got big visions and they want to buy a second home. And they're both teachers, so there's not a lot of extra cash per month, but they're really good savers. So in their minds, they are thinking, gosh, how do I buy that second home? What is the down payment requirement? How much do I have to save to be able to qualify for X purchase price, etc. And while saving is important, we also encourage them, because they did a very large down payment on the house that they just purchased. So we also encourage them, just pay attention to what's happening with your equity and your appreciation. When you get closer to that 5-year mark and wanting to pull the trigger and buy the house, in addition to your savings, you could always look at leveraging your current home and the equity in that home to help you with the down payment. So again, that can be done through a home equity line of credit or some type of closed-end loan. It's lots of different ways to attack that, but just realize that you have an asset that most often is growing in the value of that asset over time. And even though they're 5 years out, it was so great that they reached out and we had the conversation, because now they have a clear roadmap. They understand how to approach them getting that goal of a second home in 5 years, together with savings, together with paying attention to what's happening with their equity and appreciation, and realizing that it really is attainable. So let's dig into downsizing. And it really doesn't have to be downsizing. It could just be wanting to buy another home. What do you do with your existing home? I think the automatic is people are like, well, I got to sell my home. But that's not always the case, depending on what your goal is and depending on the market. Sometimes if it's a buyer's market in the area that you want to buy, it may not be a good time to sell. So you could consider, for short-term or long-term, maybe you look to rent out your current home and go buy the new home in what we would deem as a buyer's market. And then at some point in the future, when the market turns, because real estate markets go up and down, we know this, that would be the point that you would sell your house. And a lot of people don't realize that if you're going to rent out your house on a long-term rental basis, then the lender can exclude that payment if you have a lease agreement on that property. Like if we can document what average rents are for the neighborhood and you're going to be leasing that out, then many times that helps with the qualification of the new house, because that mortgage itself is kind of offset by the projected rental income. And so I know people don't know that, but again, this is the importance of really having clarity and understanding what's ahead of you when you're trying to achieve these goals. And you might be just thinking about it right now. It might just be like a little seed, but guess what? These seeds grow, and let's let them grow with the proper strategy. There's so much that goes into the mortgage lending process, and it is not one size fits all. And I can't sit here, I'd be here for days, years to talk about the different scenarios, because honestly, everybody has a different footprint, a different scenario. So better understanding what your goal is, what your footprint is, what's going on with the equity of your home. Do you even have the risk tolerance to rent it out? Some people are like, heck no, I do not want to be a landlord. Okay, great. We spoke about it. It's off the table. How else can we help you achieve the goal? As we move into a new year, I think that realizing that life changes. Now, I'm an empty nester now. My kids are out of the house. So what does that mean for Dan and me? What does that mean for our home? What does that mean for the home we've been in for 22 years? Is it time to downsize? These are conversations that we're having, and you may be having it too. So the next level of the dream of upsizing or downsizing, or what that future looks like for you based on where your family is, maybe the next 1 to 5 years, it's never too early to just have a conversation with us so we can help and be part of that journey and kind of maybe see some things that you're not considering. That's what this is about. That's why we're here. It's not just about obtaining a home loan. It's about the strategy that goes into life to be able to help people accomplish their financial goals. Whatever your goals are for 2026, just know we're here to help. We've included a link. Just get on there, schedule a 15-minute conversation. Talk about your hopes, your dreams, what you're trying to accomplish in 2026. Doesn't have to be an arduous phone call. It's easy, it's high level, and we're just going to talk through your particular goal and a strategy to help you get there.